Everyone thinks market bubbles are a modern invention. They're wrong. One of the earliest and most dramatic occurred centuries ago. In the 17th century Netherlands, a single flower, the tulip, became the unlikely centerpiece of an unprecedented economic phenomenon. Originating from Central Asia, these vibrant blooms, particularly those with unique broken patterns caused by a virus, were symbols of status and exotic luxury. Initially, the trade in tulips was a legitimate, albeit high-value, market. Wealthy merchants and nobles admired their beauty and rarity. However, as demand grew, so did the speculation. By the 1630s, the prices of certain tulip bulbs began to detach dramatically from their intrinsic value. The market became a frenzy. Ordinary citizens, eager for quick riches, started investing their life savings. Contracts to purchase bulbs, not the physical bulbs themselves, were traded multiple times a day. Some single bulbs were reportedly exchanging hands for more than the annual income of skilled craftsmen or even the cost of entire houses. This speculative fervor created a classic economic bubble. Prices soared not because of any real increase in the tulip's utility or scarcity, but purely on the expectation that someone else would pay an even higher price. People borrowed heavily, using their homes and businesses as collateral, fueling the unsustainable ascent. The peak arrived in February 1637. Almost overnight, confidence evaporated. Buyers vanished. The last person to buy a tulip at an inflated price found no one willing to purchase it for even a fraction of what they paid. The bubble burst with brutal speed. Thousands of investors, from wealthy merchants to humble artisans, were ruined. Many faced bankruptcy, losing their homes and livelihoods. While the Dutch economy as a whole recovered relatively quickly, the personal devastation for those caught in the mania was profound and lasting. Tulip mania stands as a stark historical case study of speculative excess. It illustrates how rapidly asset prices can inflate when driven by herd mentality and the allure of quick wealth rather than underlying value. The phenomenon has been studied for centuries as an early example of irrational exuberance. Understanding such historical events helps illuminate the patterns and potential pitfalls that can manifest in various financial markets, from commodities to real estate, across different eras. The lessons from 17th century Amsterdam continue to resonate. This video is for educational and informational purposes only and is not financial advice. Always do your own research. Subscribe for more deep dives into the historical, political, and financial forces that shape our world. This video is for educational and informational purposes only and is not financial advice. Always do your own research.